Hey, everybody. Before we get going on today's podcast, want to remind you that the registration is open for the AgView Executive Business Conference held in Phoenix, Arizona this year, January 21st through the 24th. Go on to the AgView Solutions website, agviewsolutions.com, and click on to the conference tab, and you'll be able to go in there and look at all of the great things we have planned for this year's conference. A ton of great educators that'll be there. And so go in and check it out. We look forward to seeing you at the conference this year. Thanks. Welcome, everybody, to another episode of the AgView Pitch. We're heading into another marketing week in the middle part of October, right in the heat of harvest for lots of people, the 13th through the 17th. And we have with us today Jeff Fichtelman. Jeff, how's it going today?
Well, it's going well. Thanks for having me on again.
Yeah, appreciate it. We were supposed to record yesterday, and I called you and said Cargill wants more trucks, and it's interesting. We're in the heart of harvest, and basis seems to be improving in some areas, including our area a little bit too. I think there's some confusion among the processors. Where's the corn? And I think guys are probably filling their bins right now, but it is given between price pressure and harvest pressure, I guess you could call it. And I think there's still guys rolling on soybeans yet too, and people maybe stashing some of those away. What are you seeing for harvest progress in the eastern half of the world here?
Yeah, I would say a very similar theme this year out east as well in terms of the elevators. It feels very reminiscent to last year where, a lot of these elevators, for lack of a better term, were pretty arrogant. There was a ton of corn out there and the early basis was really poor. And then it just never came. And they essentially had to chase their tail all the way through the end of harvest and through really December, January. So,
Mm-hmm.
and the question last year, of course, was the corn truly not there, or are farmers now getting really good at holding off the market with all the on-farm storage they've built? I think it's probably a combination of both. And then obviously the futures market being as low as it is isn't helping. I think you also pair that with this. At this point, DC has mentioned they are going to do some kind of aid payment, I don't know, 100 times in various forms and on various news agencies. So I think if is no longer in question, it's a matter of how much and when. But I think if farmers have a little bit of faith that that could help patch some of the bills that are due in December, January, that could also help hold this corn off the market, which has created an environment where, yeah, out east, we're seeing a lot of elevators scrambling a bit. There's certainly some regions that have a little better crop, but in terms of yields and harvest progress, a lot of guys are mostly done with beans. There's a few that are completely done, and it's been interesting. A very similar theme out east. And again, my areas that we work with farmers on is Ohio, Michigan, Indiana, Kentucky, and then a few spots in Illinois. But almost everybody's told me the same thing. They're shocked at how well the yields have held up, specifically beans, because that's where they've spent most of their time on. And it's off of the record, but it's very similar to last year. And it's also better than kind of the worst case expectation. So it's kind of right in the middle, far from a disaster. We have a few guys that had some pretty unfortunate scenarios, very few that had really good yields. Almost everybody seems to come in right in line with last year. And I think it tells me a few things. One, and then it's hard to make any long-term interpretations off of a few years of anecdotal yield results, but I'm growing to have this belief that it's really hard to kill the crops in the US. And maybe we've gone too many years removed from 2012, so the shock of that year is worn off. But you look from 2016 to current, especially on corn, national corn yields have been in like a 5 bushel range for the last 8, 9 years. And yet every year it's pretty common wisdom in the grain markets that we could kill the crop. We could take it back 10, 20, 30 bushels. And I think the outcome from a marketing perspective is I think big time rallies that are based on supply are almost always going to fail earlier than we all believe,
Mm-hmm.
because it's hard to really kill the crop and sustain big rallies. And alternatively, we still can have big rallies if it's demand led, like 2021 and I guess arguably 22 because the supply shock came in Ukraine. But within the US, if every summer we're expecting that, I think we're going to be disappointed. And I think we almost need to shift our when do we sell out of the summer and maybe into Jan, Feb, March because that's kind of the key summer months of Brazil and Argentina, and has created more market volatility in the last 5 years than our summer has. So,
Hmm.
but yeah, I mean, beans largely equal to last year, and then corn. I mean, we're early in a lot of guys for corn, but I mean, so far, reason to be mildly optimistic. No disasters, but it's also well off where they thought at the end of kind of July window.
Yeah, we're seeing some variability, and usually when there's variability, that indicates, not a stellar crop. The thing that's been interesting to me, and I've mentioned this in the last couple of weeks, in talking to some of the processors and things, that how much old crop was still coming in up until, and maybe still a little bit yet, but even like 2 weeks ago, it was like 40% of the corn coming in was still old crop. Makes you really think, man, there must have been a lot more bushels out there than I think USDA or anybody anticipated. I think as well. That kind of that tin can harvest, quote unquote, whatever you call it. That really influenced, I think, basis early, and now that that's kind of off the pace, guys are filling bins. I think, like I said, a lot people are stashing some beans away and stuff, and yeah, it's just kind of interesting to see kind of what's cooking. I want to shift gears a little bit. Um, Try to decide which direction I want to go first. The last couple of weeks, um, we've really stirred the pot with the tariff thing and where prices are at. And there's so darn much emotion, and it's been interesting to see how you can uh, just light a match a little bit, and everybody throws gas on the fire as far as emotions go. And I understand the frustration, but what's your take on the tariffs and the payments and that kind of thing? Because I think there's a camp out there that feels like, okay, well, it's the tariffs that's causing the price issues, and then conversely, I think there's the camp that says, well, this started, back in 2020, and we've had good crops everywhere, and it's continuing. And the reason I'm asking this question and bringing this up is, what's to give the market any strength, whether it's corn, soybeans, or wheat, or any of the grains, unless the funds and all of a sudden wanted to pour a whole ton of money into it. Where's the strength going to come from? Is there anything, because it's not just the tariffs, and people can throw darts at that or whatever. I mean, that's a piece of the puzzle. It's part of um, the algebra, but there's a whole bunch of other things. So it's hard to throw darts at one thing and say this is the issue, why prices are where they're at, because we have inflation. And the reason we're not making money, speaking as a farmer also, is because of how high our cost of production is. I mean, we can stomach $4 corn and $10 or $11 soybeans all day long if we don't have to pay, $1,000 or 15, or $1,100 an acre to put a corn crop in, or $900. But the inflation, when we went through COVID and then we had good yields in 21, 22, it's a combination of a whole bunch of things, and I think people are trying to be too simplistic about it. Any thoughts on
Yeah.
payments, where this could go, or if we just continue to go sideways?
I mean, I'll kind of work backwards because I mean, it's a really important question right now because it does drive the idea of do we throw in the towel or do we hold on because there's a hope?
Right.
Um, I think the bull stories in beans at this point, I think largely speaking, we're too far into harvest with too many anecdotal results across the country that yields are probably pretty good. And maybe you can argue nuance of what does that translate to nationally, but I think gone are like the supply shock stories in beans, and we'll see. Obviously, we're not going to have an October report. A little frustrating, but it is what it is. We're going to have to wait till November for the USDA to put out numbers, but the supply side on beans in the US is kind of gone. So the next month or two, I think it's going to struggle a little bit. There is a legitimate chance, though. I mean, we still have Brazil and Argentina. They have a La Nina weather pattern coming in. Their yields are a little more variable year to year than the U.S., although beans in the U.S. can be variable as well. So that is a possibility. And you think of like, what are the odds of a supply shock in Argentina and Brazil? Brazil, especially because they are such a behemoth in the soybean supply of the U.S. or in the world. I mean, seems like pretty consistently 4 out of 5 years they have a really good yield. So arguably, if you're betting on them having a bad yield, that's a 20% probability. That's not very good. 1 out of 5 years, they're going to have a bad yield. Conversely, if you're a believer in their due, they've had four incredible yields in a row. So maybe there is something to weather patterns shifting. Um, so I personally, I would say for the guys that we're working with, I mean, today, or I guess as we're filming this right after the beans broke, mainly on the tariff news from Trump, we're not recommending any additional sales, especially if you're over 50% sold. For guys who are under it, then I mean, there's some value to going out, maybe selling March. And if we get a payment as large as what we're hearing, which is more reminiscent of 2019 in the dollar fifty a bushel range, then maybe that works, especially if you've maybe yielded a little bit better on the bean side. But I don't think it's time to throw in the towel on either crop at this moment. But in terms of what can create a sustainable rally in the next 3 to 6 months, it's tough. It's totally relying on South America and Brazil. And the one thing we've learned pretty consistently over the last 2.5 years, and I do think this will continue, is that rallies are always kind of feeble and they don't go as far as we all want.
Mm-hmm.
And my new mindset is like, every time you get a 5 day rally or a 30 or 40 cent rally in beans, 20 or 30 cent rally in corn, just close your eyes and sell something. Because if over the course of time our sales are after 5 day rallies and you average them together, it's going to create a pretty darn good outcome. Because guessing all of the things that impact markets right now is really hard, even for people who spend, I mean, my entire life is trying to figure out what moves markets and when do you sell, and it's crazy. But and then going to the tariff side, I mean, it's interesting because I think the large majority of us in the grain industry probably voted Republican. We voted for Trump. Um, I think we all generally support the idea of clamping down on China, and I think China has really manipulated markets in a big way. The tough thing now is the game theory scenario that they're equally as large and impactful in the world market. And now we have power over them because if we stop buying Chinese goods, that will make a major impact. The rest of the world cannot fulfill our insatiable demand for stuff that China makes. But on the flip side, they have like rare earths and other key materials that we badly need. So we're in this kind of predicament, and unfortunately, it feels like farmers are kind of the people that get hurt the most in this back and forth. And I think, largely speaking, if and the tough thing is, I don't know how the outcome is super positive. I think every farmer I talk to is like, screw China, we need to do this. The tough thing is, I don't know how the outcome results in positives.
Mm-hmm.
China can play a lot longer game than us because they're not really a democracy. The same leaders are going to be there for decades. Trump's got what, 2.5, 3 more years. So they can just outwait Trump and hope that some other president will come in and kind of reverse what he's done. So they just have a lot stronger hand in terms of patience than us. So it creates an environment that if China really stays away, uh, we might be in a few year window of tough times. And maybe it creates an annual kind of Trump paying farmers, and it might feel unpleasant, but it is what it is. And so I don't know if there's any good answers right now. I mean, obviously, late Friday they ramped up. Trump went back and added another 100% tariff to China, at least as of now. He's gone back and forth a bunch of times, so we'll see where that goes.
Right. Yeah, I think, it raises so much emotion that it does kind of need to be discussed a little bit and keep everybody somewhat calm and chill out a little bit and, just let the system work a little bit. And, I just think, we can't control Trump, and I think the farmer gets bitched at a lot because, well, you voted for him, so you're getting what you deserve or whatever type of thing. Well, the farmers
Yeah.
didn't elect Trump all by themselves, I'm pretty sure. I think there was other people in the country. We're 1% of the population. We sure as hell weren't the ones that got him elected. That the farmers may have helped get the Trump administration in place, but they weren't the factor of it when we're 1% of the population, you know. So I mean, it's it's
Well,
kind of like lay off the farmers a little bit, dude. You know, it's just kind of funny how people get excited about, you know, and we want, you know, what the government's trying to do is create reasonably priced food. If you look at what we pay for food in the United States versus any other country, it's a significantly higher percentage of
Mhm.
the, you know, of their annual income in terms of what it is in the US, you know, unless you choose to go out to eat all the time, and then it's going to cost more, but you're not paying just for the food, you're paying for service and a whole bunch of other crap. So it's, you know, I
Yeah.
guess it just it,
Well,
it's
a couple more key thoughts. I mean, one, to your point, uh, in a weird way. So like when you hear Trump talk about it, I want to support the farmers through new demand within the U.S. and higher prices to make the economics work. That would be fantastic for the farm economy, and I'm very in support of that. The problem is if prices shoot up, then it creates food inflation, and that's very bad for everyone else. And in a weird way, like it's not pleasant, but if prices stay low, that keeps food inflation down. That's generally good for society, and but it doesn't work for the economics. And I was not, I mean, I was in around in the 80s, but I was a young kid, so I didn't know about farming in the 80s. But obviously, a lot of farmers are very well aware of the government programs and CCC loans, all that stuff, and playing the game. And maybe there's going to be an element of that game that comes back, and we have to be smart and kind of wise to it. And the last thing I want to say is I have a lot of non-ag, non-farming friends who in the last 3 weeks have sent me messages like, what do you think? Or they'll just like say whatever they think. My common response is like, look, the game of farming is one of the most difficult industries in the world because it is exceptionally high cost and very razor thin margins. And that's not a great business model. And then on top of that, the revenue line is not fixed. It is highly variable, highly volatile. It swings between profits and losses regularly, and almost all of the things that affect it are completely out of the control of the farmer. And if it was so profitable, because a lot of people who send me this, like, oh, farmers don't deserve it. I said, okay, if it's so profitable, why don't you go out, buy some land, buy some equipment, and start farming? We haven't seen first generation farmers come in a long, long time. So, I mean, I think a lot of them, it's misconceptions about the realities. So I
it's
think it's generally okay. We'll get through it.
yeah, social media does a lot of damage, and I think there's a lot of people that like to talk that don't know anything about what they're talking about. So it's,
Yes.
that'll stir some people, but that's good. That's fine. So I guess to get back on track as we kind of think about, okay, some of the practical things on the operation that we need to be doing. You know, I talked about the processors wondering where the grain's at right now, and basis opportunities have been you know getting a little bit better. And I think as we consider that as producers, and you know, last week we finished up with things heading a little lower. Our discovery price for crop insurance right now is 420. As we completed last week, is 420 for corn and 1021 for soybeans, significantly below the cost of production. But you know, with the where the spring prices were, we're going to see some crop insurance indemnities, I think, in some of these fields. You know, these guys that are yielding just a little bit under APH, they're going to probably be likely triggering indemnity payments. So if some of those funds are coming in, but yet there's extra bushels that maybe, you know, they got just a few extra bushels that either aren't priced or they don't have space for. And that's one of the questions I get a lot is, you know, I don't have everything quite sold. And you said one of the things you said a little bit ago was don't throw the towel in yet. So my question is what are some practical considerations to make sure that we, you know, don't let the floor drop out from underneath us, but yet make sure that we get some revenue coming in too, because we need to cash flow. And that's the biggest thing I see with a lot of operations right now. We have a ton of line of credit money. There's a ton of money borrowed. There's just a lot of debt. So your friends that say that we got a lot of money, we also have a ton of debt
Yeah.
right now. And the banks seem to want paid back for some weird reason. You know, you borrow money from them, they'd like it back. And so, you know, being a little tongue in cheek there, but you know, we're going to have the cash flow. We're going to have to make sales. Do we consider any kind of call strategy, or do we just throw the towel in on those bushels that have to go to town? Any perspective there or thoughts?
Yeah. Yeah. I mean, this is kind of the advice and the plan that we've done over the last 2 or 3 weeks with the guys I work with is one, I ask them all, let's list cash flow needs by the end of November, the end of December, and the end of January. And it's very important to be nuanced because there is carry in the market for each month. So if you have bills that are due January 1st, that's going to be hard to deliver in January, but we can absolutely deliver it in December and get the cash flow from that. Let's not just send it in and harvest and get the worst harvest cash price. So first start and lay out and say, okay, what cash do I need? And I think a lot of guys sometimes get strung up by it's like it feels like it has to be all or nothing on a decision. But I'm a big fan of just like let's back into it and say, okay, if I need 500,000 by end of December, what is the best crop to get there? The natural instinct is beans, but really it's which bushels make me the most by putting them in the bin. And then what's my bin sizes? Obviously, if you only have 50 or 75,000 bushel bin sizes and you only grow 30 or 40,000 beans, it doesn't make sense to put a half full bin in there. So we should put corn even if beans pay more. But
Mm-hmm.
really trying back into like, okay, let's actually sell cash and pay off those bills. And hopefully that leaves at least some 30, 40, 50% unpriced that you can put in the bin and have more patience on. Because one thing I've learned is when you're trying to capture upside on too much, and to do that, you have to borrow extra money or you're really pushing your luck on the cash flow. You're never going to have the patience to capture those good values. The market will shake you out and you'll kind of panic sell or move them at the wrong time. So I'm a big fan of figuring out how to pay all the bills that are due at least through January with actual cash sales. No need to be super fancy. Now, to your point, Chris, like the basis markets are at least pretty good right now. And if a guy's starting off 0 or very little percent, maybe it's a blend of basis only and futures and they'll work some conservative futures offers because the markets do bounce. Um, but bottom line, I love actually just getting enough sold to pay those bills. Now, if that's taking you to 80%, then to your point, adding some upside calls is okay. The tough thing is, like, we're just in a world where even spending 20 cents on 15, 20% of your production is really money we don't want to risk. And I think even though we don't know what the potential Trump payment's going to be, to your point, we can reasonably assume some crop insurance payouts. I know there's still some variables left on that. But if we say, hey, even if we're selling $10 cash beans for December delivery, but between those two payments, it might turn into 11 or 11.50. Well, I can make that work. And the timing of those payments are going to be all over the place. And we don't know for sure what those payments will be, but there is an element of faith in all marketing. You kind of have to believe that either Mother Nature will come through or the payments will. And I'm a big fan of trying to cover those cash flow needs through January and then be patient on the rest, if that makes sense.
Yeah, I think, to your point, there's going to be some operations out there that would have to be pretty heavily sold to for a couple of reasons. Number one, storage. Number two, I think cash flow and paying down lines of credit and looking at the cost of money. I mean, a couple of years ago, 3.5% interest versus 8% interest is a huge cost of carry. And then I think you and I talked when I called you yesterday. I think just making the comment that commercial storage is almost an absolute. You can't really justify it at all. Unless you're a store and ignore type person where you got enough money you can just throw it in there, I guess, and just
Yeah.
throw hope at the sky. But I guess that's just the conundrum that everybody's in. And I think that's where, people like you is just being able to pick up the phone and have a conversation and run through the scenarios of, okay, this is plan A, this is plan B, this is plan C, maybe even you can get to plan D and weigh them each and say, okay, which one's the least impactful? It's not which one is the most profitable, unfortunately, in this scenario, but it's like which one is the least impactful to the bottom line in some cases that we've been looking at anyway. So,
I just want to say too, I mean, this is a era of time that we might be stuck in for a while. And it's a time where for all avenues of farming, it's so important to find experts that like help you because it's so hard to do things half-ass and then do it really well.
Hmm.
And not saying guys half-ass marketing by any means, but a lot of guys only spend part-time thinking about it. It's, hey, I'm super busy. It's not on my mind at all. And then finally it rained out and I got some time to think. Well, rarely does a market provide that gift that that's the day is the best day to sell. So I'd say surround yourself with people that can really add value to your operation. It's not a perfect science, and it won't always, and not everybody is an absolute ideal expert to support you. But just generally speaking, if on the farming side you feel like, man, I'm falling short on agronomy, I'm falling short on the tax side or whatever, marketing, anything, just it's now I think it pays dividends to surround yourself with people because you're waiting until the last minute and then trying to force in marketing decisions rarely works out well. So
Hmm. Falling slow, you were saying falling short on this, that, and the other thing, and I think sleep is the other one. I'm sitting here thinking I'm still tired as hell, and so that's the other thing too. We're working our butts off trying to get the crop out. It's when some decisions need to be made. Hopefully, a plan was put together. If it wasn't, then it's really, like you said, it's getting another mind or two here to kind of think through some of this stuff with you. I
yeah,
think is really key. I want to wrap up the conversation thinking a little bit about the next year, about 2026. I know it's a long ways out there and everybody's, but like I said, we need to be planning ahead all the time too. We're in a futures market scenario. And so we need to kind of keep that in mind all the time. We look at fertilizer prices, they're sky high. I see some people backing off on some stuff where they can. Agronomically, in a lot of cases, you can't, especially on the P and K. And I also see people managing their overhead costs and doing the things they can do. Cost of production, though, going into 2026 looks, as of right now, looks like it's every bit as high as it was in 2025 because we've got continued inflation in essentially every category that we have that, to put the crop in. Anything that you're watching for 26, if we get, you're talking about, if we get some strength in this market for this year, why would we not maybe be looking at, if we're buying some fertilizer or whatever, taking some risk off the table at the same time on 26? I mean, do you think we should be keeping an eye on the 26 corn, beans, wheat, whatever it is, grains, as we pull the trigger
yeah,
on some 25? Should we be pulling the trigger on some 26?
yeah. It's when you're in these kind of crappy markets, what happens? You get the big carry from spot to the distant months, and I can't tell you how many times guys are like, man, if I can just get 450 D's corn, I would love that. I say, well, you realize D's 26 is 465. Like, well, I don't want that. And I say,
Right. Yeah.
okay, well,
Yeah.
um,
It's a
it,
futures
it
market, dude. Yeah.
yeah. I was like, take 10% to the market right off the bat. Like
Yep.
if our worst sale next year is 465 and 1160 beans, or I'm sorry, 1060. I would love to say 1160, ten
Uh,
sixty
I would
beans.
I would be like, you'd be pretty popular if you could make that happen.
Yeah. I got away, guys. But no, I mean if that's our worst sale, and this is all about perspective. It's like, and I'm guessing that's at best break even, maybe even a small loss to put sales on there. But today, if our worst sale is at break even, that's a welcome thing. What again happens is guys think all or nothing. It's like, if I'm not above break even, I'm not going to make a sale. We're just in an environment where the market lives on break evens to small losses. We just got to be disciplined. And what always happens in big crop years is it creates an environment where the best sale is a year and a half out. And then it just slowly grinds down. So, but guys always understandably are so busy, they're only focused on the present, not the future. But this is a world where it pays to focus on the future and get some early sales on, have some just standing good to cancel offers out there between 460 and 510, just 5-10% increments all the way up to get to 25 or 30% sold, ideally at like a 470, 480 range, but actually have the offer working because it's those months. even the funds don't pay attention to them. So a lot of times you get some pretty interesting moves that can pop up and fill those offers. So every year around really summer of the previous year, just start putting offers out there that are in reach. I'd be curious from your perspective, Chris. I know you obviously mentioned costs are going up, but what would you say is break even on a per bushel rate?
Well, I mean, using APH levels, it's just as high as it was last year. I mean, we're talking in the 460 range on average for corn, cash on farm. That's not futures. So that's the problem with, pulling the trigger at 460 on average. Now there's producers that cost production's 40 cents less than that or whatever because they, their land rents are less or they own more land or they're just more stable financially or whatever. But the average is legitimately, at least from the data that we look at, and the 26 numbers that we have currently are showing us right around that 460 range, and soybeans are right around 1170. So that's where and that's again that's using APH. So I mean, if you can take if the average bean yield is 64 bushel or whatever, I think is what it is projected on the projected APHs for 26. If you could yield 10 bushel better than that, all of a sudden you're down in the range where we're at right now and probably could survive, without a loss. You're not gonna make any money, but at least you can fight another day. On the corn, I think, again, it comes down to basis. I mean, you go to the North Dakota and stuff, their basis just sucks, terrible. And, especially on the soybean side, but on the corn side, it sucks also. So they're in a conundrum up there, and it's not like it's great in other areas because you look at the cost of land and some of the infrastructure expenses. It is sort of all relative too, right? I mean, you can find cash rents in the fours and 500 range in Illinois and Iowa pretty easily if you look around, and some of those are cost averaged with other land they have or whatever, but they're still the rents are too high, relative to where they should be. And equipment's gone up 43% since 2020 since the end of 2020, machinery and equipment's gone up 43%. So it's really the issue is inflation. You can talk tariffs all damn day long. I don't care. I mean, the issue is inflation. That's what's really screwed us as much as anything is just on the cost of production side of things. And so that's where some of the wizards that make comments, it'd be nice to,
I
go buy,
know.
like you
I
said,
mean,
go buy some of this stuff and see how it works for you.
yeah. And the problem is, yeah, to your point, I mean, I'm going to generalize, but in the last 10 years, the cost has gone up, yeah, 50 to 70%, and price has gone up 10. Like the math doesn't work very well in that world.
Hmm.
And I think the one thing I always challenge guys with, because they start break evens with seemingly a little bit conservative yields, and it creates an impossibly high break even per bushel. And I say, in the last 5 years, how often have you yielded below
Good
that?
point.
And
Yeah.
rarely.
Yeah.
So it it almost what's going to happen in these kind of markets, and maybe we'll get some kind of bailout rally. And I'll eat my words on this, but in these kind of markets, it actually the guys who do the best are the ones who are the most optimistic to start the year.
Yep. Well,
Because
yeah, to your point, you said one time when this was not to interrupt, but you had made a comment a while back, and I loved it because we do that as well, where you said, incrementally show your yields and where's your cost production at each incremental yield, and don't be too conservative because you'll never sell, right? I mean, if it's like, I'm going to be 10 bushel under APH is how I'm going to calculate my numbers. Well, you calculate them there, shit, you'll never ever make a sale because your price isn't going to come to you. Your margin, I've always loved just putting a margin target in, okay. And it's not just price, it's price and production, right? And your cost. It's kind of that three-legged stool, and say, okay, what is my margin target,
yeah, I mean it's the game's not easy, and I don't know if it will be, and that's why we have to make sure that we're not creating impossible hurdles for ourselves. And
Right.
there is no easy answer. I mean, that's the simple reality of it. But the one thing I would say at this moment is knowing your numbers, presenting well, showcasing that you have a marketing plan or marketing discipline when you go talk to the banker this winter. I mean, it's going to be the hardest conversations we've had as an industry in a long, long time. And I think the guys who come prepared will look really good. And I
Mhm.
think that's key right now.
Yeah, for sure. No, I think we've had a really good conversation here. I think I like your comment on the banking too, because that's that's a whole nother topic for another hour of conversation at some point. But just on getting prepped for that, and we will be doing that with Jeremy Dutch too, working on the bank side of things. If you if people want to get a hold of you and just kind of talk through some of those types of scenarios and things that we just talked about, or reach out and send you some hate mail instead of me or something, how do they get a hold of you?
Yeah, just go to jp2risk.com. That's a company that we do marketing under. And there's a little contact us. You can see our information on there. But yeah, it's a time where we got to buckle down and do everything we can. And what the last thing I want to leave with a mildly optimistic tone here is there was a study done just generally businesses that started during recessions versus businesses that started during economic booms. You fast forward 10 years, the success rate, the businesses that are still around that started in recession were 5 times more than those started in booms because people absolutely formed the best behaviors because they had to. They had no other choice. So we're forming a period of time where let's really maximize the opportunity to build really good behaviors, good discipline, good kind of cost structures. I mean, there's no easy answer, but a lot of little wins can add up. And let's try and take advantage of that while we can.
Yeah, I got a text from a farmer yesterday, just kind of checking in and stuff, and we just kind of back and forth a little bit about the margin tightness and that sort of thing. And the my final comment to him, which is a comment for here, is I think enjoy the journey. It's it. I think what happens is when things are going really tight, some people get uptight, some people ignore it. I mean, everybody handles situations a little differently, right? And so I think the biggest thing I want to leave people with is just the reason we're in this industry is because we're passionate about it and because we love what we do. And so I think that's the thing that people have to keep in mind is that you know just do your best and stay focused, stay positive, like you said. And I think we're blessed to be in this industry. We're 1% of the population literally producing food.
Yeah.
So just we're passionate about it. Keep at it and stay safe. And advice to myself too: get a little sleep over the weekends when you can, because it's tough. But I also want to throw a plug in for 19 minutes. A comment you made. 19 minutes is a subscription podcast that we do. You can look it up on the AgView Solutions website as a plug for that. But I just did two back to back. I did one on scarcity mindset, which is kind of like what you just brought up, is the best decisions are made during difficult times. We make good decisions during difficult times, and sometimes during really good times, we make really poor decisions. And so I always tell people when times are very tight, margins are tight, that teaches us to be better business people. And when they're not, when times are really good, we can have what we call, which was the second episode I did, was on an abundance mindset. So the difference between a scarcity mindset and an abundance mindset, and they have to be balanced, because having a scarcity mindset can be negative, but also having an abundance mindset can be negative. And there's a balance between the two and understanding that. So if people want to go check that out while they're harvesting, you can subscribe. They come out the 9th, the 19th, and the 29th of every month, and it's $30 a month, and I think there's like 110 episodes in there now, and you can listen to every single one of them if you want while you're in the combine or doing whatever. So,
Yeah.
with that said, that's all I got. Any final words, Jeff, and we'll wrap it up.
No, I mean, yeah, I love it. Always be learning. I mean, life is a journey. It's ups and downs. It's frustrating, but yeah, I appreciate where we are and the luck that we have to be in this industry. So,
Yeah, yeah, we're pretty blessed. With that said, hey Jeff, as usual, really appreciate your time today, and we'll get you back again towards the end of harvest and see what the numbers really were.
All right. Sounds
Right.
good. Take care.
Sounds good. Thanks, Jeff. Thanks, everybody. We will catch you again next time on the AgView Pitch.